Hello, hey,
Good
Don.
morning, Kevin. How are you?
Good, good. How about you?
Well, it's another day, right?
Hey, yeah, yeah. Hey, thank you for jumping on the Zoom and share some informations with us today.
Okay.
Hey, so the purpose that I would love you to share some informations is because of this pandemic, a lot of buyer has questions. For an example, they're wondering anything has been changed, due to this pandemic. What they should like paying attention to for especially for those clients that who is thinking about buying a home and they're not sure, like at this moment, what they should pay attention to. Can you share a little bit information about that?
Well, yeah. First thing is credit. Credit right now is what's really what's driving a lot of the bond market's radical movements right now. That margin calls. And I won't go into all that kind of detail, but the challenge right now is that the market isn't sure what's going to happen in the next month, 2 months, 3 months. So consequently, they're pulling back a little bit with the amount of risk that they're willing to take. And by risk, I'm referring to, if you recall, the non-QM, the non-Fannie Mae, Freddie Mac, FHA, VA, USDA, the mainstream kind of loans are still pretty much available. It's when you get to the stuff with a little more risk in it is where it's sort of almost evaporated. So for a borrower, credit is probably one of the more important things to keep an eye on and try to keep as clean as you can. It's always been important, but it's more important now than it probably ever has been.
I see. All right, sounds good. So another question is that I have been asked a lot, clients keep asking, because you are like you have 30 plus years experience, right? In
31.
yep. So
31.
so you know what happened in 2008, and a lot of people worry about this is what's gonna happen again, like what we used to have in 2008. What is your thought about that?
This is just exploded as far as the question and the anticipation of what's going to happen and so on. I have a couple charts. I wanted to illustrate what I'm about to say and why I'm about to say it, because I don't want this to sound like, hey, he's a mortgage person, he wants people to buy houses. My premise for what I'm about to say is based off of historical data. Here's the bottom line and if you'll see this chart, it's got peaks and valleys. And if you go back to 2007 and 2008, that time of the market, we had huge excess inventory. Okay.
Okay.
Today, it's the exact opposite. And I think the buyers out there can attest to when they go to try to find a house, inventory is low. So actually we're even lower now in inventory than we were at the top end of the inventory that we had back in 2008. So where I'm going with this is the reason that we feel when we come out of this, on the other side of this coronavirus situation, that the market's still going to be strong is because we've got an inventory issue and there's still a lot of demand for real estate, but there isn't enough real estate to go around. So the big drops that we had in values back in 2008 were 100% due to we had too much inventory. So now, because we're not in that situation, we think that it's just real estate's going to be hot again as soon as we get past this situation that we're in right now. So does that make any sense?
Yeah, like that's about the same information that we are getting right now, from all the experts. And what I'm hearing is, 2008 is a housing crisis, right? And this is a health crisis. So it's a totally different thing. And of course, the health crisis like slow down the economy and then affect a little bit about, the housing industry and stuff. But like we also seeing that like all the experts are saying once this is over and we're gonna have a strong comeback, people come back to the market again. You know, for those people who are worried about they're being, you know, afraid right now what's going to happen, but like eventually they're gonna come back on the market again. So
yeah, I mean, right now with unfortunately the uncertainty that we have, if you're thinking about listing your house, it's probably a good time to get that thing prepared to ready to meet the demand once this demand starts to come back and everybody is allowed to leave their house. So it's probably one of the better times to sell, and you know, from a selling perspective, because the inventory is so low.
okay, sounds good. So, and in regarding what's happened right now from your industry, like the lending standpoint, like is that the process going to take longer, or is the normal time frame right now? That's what.
Yeah, you know what? Pipelines are pretty full, and the mortgage industry as a whole is pretty busy. So where we're seeing the slowdown right now is with appraisals. Now, the Fed and Congress has sort of tried to help that out with allowing for more appraisal waivers, which means if your equity position is a certain amount and you're putting a good amount down, may not need an appraisal at all. That's occurring a little more often than it was before. But the other thing is, because of the virus, they're allowing for drive-by appraisals or exterior inspections only. So what this is going to do, because the Congress has acknowledged the issue, appraisers are backed up. In other words, they've got more orders than they have time to do. So consequently, an appraisal that was taking a week to 10 days is now taking 2 to 3 weeks, even longer, to get back, depending on where your property is located and how many appraisers are available in that area. So that's where the slowdown is coming.
I see.
What we're suggesting is, instead of 30-day closings now, you know, 45 should still get it done, but 45, 60 days is more the norm because of these appraisal delays.
I see. Sounds good. Perfect. And yeah, like thank you for sharing all these good informations. You know, it's been really helpful. That's answered a lot of my clients, you know, questions about what's going on right now, because a lot of people are worried and they're on the fence and seeing what's going to happen. Yeah.
Mention one more thing, Kevin, if it's okay, and that is, I get questions all day long. Hey, Don, the Fed lowered the Fed funds rate to 0. I want a 0% interest rate. I thought it was worth maybe at least talking a little bit about that and why the Fed funds rate isn't the rate for a consumer, because that's the rate at which banks borrow money from the Fed overnight. So if you can take a 30-year, take a mortgage and pay it back tomorrow, you can borrow money from the Fed at 0%. That's not the reality of 30-year, 15-year mortgages. They're stretched out over a longer period of time. So, that's a little misunderstanding in the industry. The other thing is, bond prices are fluctuating quite a bit now. So, and because of the risk that we mentioned at the beginning of the call, interest rates are a little bit higher than probably what they could be, but it's just a matter of risk right now and supply and demand. There's just more mortgage bonds out there than what the market can absorb. And that's why the Fed currently is doing this big buying spree of mortgage-backed securities, because there's just a glut of them on the marketplace. So it's a supply and demand issue, which is why prices are pushing down, which makes interest rates go up. So
right.
Another little tidbit I wanted to mention today.
Right, sounds good. And I also have something that I would like to share. Let me try to share this screen. So make sure I can share that. Let me see. Do you see the screen that I'm sharing right now?
Now, see, you can do it and I can't.
Okay. All right. Sounds good. So this is what has been getting as well regarding home price, and people are talking about recessions. This is another recessions that we're going to face, and and more information's coming in say that like we are, maybe most probably we are already in a recession right now from what's going on. I mean, like that's the fact. So from these companies called Keeping Current Matters, they're doing research with the top, economists that's in the area in the US and in the world. And so this is the information they're sharing, which is like the last 5 recessions, how that affecting housing's price. So this is in comparing about recessions and home price. So the research actually showed the last 5 recessions, and 3 of them, the home price actually goes up, So, and this is kind of like telling us recessions doesn't mean housing crisis. It does affect a little bit, but it's not necessary. Yeah.
And Kevin, that chart is almost going to, if I could show my screen, the one I was trying to refer to, this big dip in '08, supply issue. That's why prices went down during that Great Recession. Right now, as your chart shows, in a recession, real estate does the best. It's always the first to bring the economy back, because if you buy a house, you're buying mulch for the front backyard, you're buying flowers, you're buying curtains, you got to buy things, and it fuels the economy. That's why there's always such focus on the real estate industry doing well in a recession, because it brings the whole country with it.
Exactly. And I think this is like, very, you're hitting the point regarding, how housing's market can contribute to the economy. So of course, like this global pandemic is not the normal thing that we are seeing. So we are still learning how this thing is going to go in regarding like housing's market, and stock market and stuff like that. But in answering those questions, is recessions mean housing's price is going to drop? Is like these informations right here telling us it's not necessary. So we will see what's going to happen, what's government's going to do with this pandemic, and in order to, affect, like, due to the economy. So, and one last thing I wanted to share, and because I saw your Facebook post the other day reminding homeowners and renter, can you share a little bit?
Well, it's basically when you're, I think what you're referring to is the bank saying you don't have to make your mortgage payment, you don't have to make your rent payment, that kind of thing.
Yeah, exactly. Yep. Mm-hmm.
Here's the thing, everybody. This is fluid. So we really don't know how this is all going to shake out. So, but think about it this way. Your landlord, they have a mortgage payment to make. If you don't pay them the rent, are they going to be able to make their mortgage payment? So even though you are giving the forbearance, is the term everybody's using, to not make that payment, it's got to be made up sometime, somehow. Now the question is the government going to pay it? Are they going to tack it on to the end of the mortgage? That's more of a problem, because mortgages are contractual. They're 30 years. It's a note. It says it's going to pay off on this date. So you can't extend it. So where is that money going to come from? It's got to be paid back. Somebody's got to pay it. Question is who? So my point with the post that I did was, if you can at all try to keep that mortgage and your rent current, it's going to save you heartburn later on, because whether you have to pay it back all at one time, whether you have to pay it back over 2 or 3 months, whether it's tacked on to the end, it's going to be paid back. The question is when and how is the government going to view this? So my point with the post, and I'll summarize it this way, is we don't know how that forbearance is going to affect people's credit. We don't think it's going to be negative, but at some point you got to pay Peter. I mean, it's going to come back to, you got to pay it one way or another, and it's going to be either at the end, in the middle, or right after this pandemic is over.
Right. Yeah. So basically what I'm hearing from you is, for an example, if I cannot make the rent this month, and then I don't pay the rent this month, like the government is saying that like the landlord cannot evict the tenants at this moment, but you have to pay, let's say sometime in May or June, you have to pay your April rent, right?
Right. And you'll have to pay, let's say you skip April, and then next month, God willing, this will be over, but it may not be the case. So you have to pay May's rent, but the landlord's going to ask you now for April's too.
Mm-hmm. Right.
So, because the point is, it's still in arrears. It's just not. It's not going to evaporate.
Right.
That rent payment's got to be made somehow. It doesn't just go away.
Right. Yeah. Exactly. Like one of my past clients, like he owned a business. Of course, the business is not working right now because they have to close. It's a restaurant, so they got a letter from their tenant say, like, we are not charging late fee. We are not gonna take any legal actions against you if you don't pay this month rent. But they also make it clear that like you do have to pay April sometime. When you can do it. So
there you go. So yeah. So again, if you have trouble, there's that stop. There's that safety cushion that you don't have to pay it. But guys, got to remember that it's following you. It's that monkey still on your back at some point.
Mm-hmm.
It's got to be paid.
Right. So cool. Thank you. Thank you so much for all the information. I mean, it's really helpful. So I'm gonna share this with all my clients. I hope you don't mind that. Yeah. Mm-hmm.
No. Please do, and I'll probably copy it and share it as well.
Yep, and I will also, let them know about your contact information. If any of them, they're doing refinance or they want to buy a house, they want to know more about what they should do, and they can feel free to contact you in person.
Yeah, the phone call is free, guys. Even if you have a question, should I pay my electric bill or should I pay my rent? I can't tell you 100% what's going to happen, but at least we can talk through it and try to get you in the best position so that when we do come out of this, you're going to be in the best position to purchase your new home.
Sounds great. All right. And I want to say thank you so much. And this is very helpful. I think we should do more video like this. So, like we can share this with our clients, so they know that what's going on. Mm-hmm.
Good talking to you, Kevin. Stay safe.
Thank you.
We think you should hire Kevin as your real estate agent.
Pure professional. So you got to sign up with him. If you're looking for an absolute great realtor, Kevin's the guy.
Absolutely. Found my dream home.